Hi, Ira Koyner here, the original IRA from Triathlon Partners. Thanks for tuning in to this episode where we're going to discuss what the best investment to achieve your long-term financial goals is. Now, might come to a surprise to most of you, but it's actually indexed universal life insurance. There are 3 points I'm going to make and why it's the best. Number one, tax treatment. Number two, the underlying investment options. Number three, the death benefit, right? So we're going to start off with the tax treatment. Why is this great? Because it has tax-free growth. It has tax-exempt withdrawals. It acts incredibly similar to a Roth IRA, except there are no limitations on who or how much can be contributed every year. Right? Everybody wants a Roth. They love that tax-free growth. And they like that tax-free withdrawals. But you can't have it. It can't be a substantial part of your retirement because you're not allowed to contribute a significant amount. Now, an index universal life policy has no limits. It can be the driver for your successful retirement. The investments options are fantastic. Now, they're based on the annual performance of the stock market, right? So, but it's different than being long the stock market. In fact, it's better. Why? Because every year there's a floor on how much the investment can lose. 0%. The investment cannot lose money in any year. Imagine if your portfolio never lost money in a year. How much better would your returns be after 20 or 30 years, right? Now, in exchange for that floor, there's a cap, meaning there's a maximum that the investment can earn in a year. And depending upon the insurance carrier you buy your policy from, the caps range right now from 10 to 25%. Right? That's a significant gain up at 25%, even at 13, 14, 15%. That's a significant cap that you can certainly make a lot of money and accumulate a lot of wealth in these policies. Now, every year, this investment structure resets. Right? So if you had a brokerage account where every year you wanted to sell out and take profit, you'd have to pay taxes. There are no taxes to be paid during the life of this policy, right? Now, let's go back to what you're going to naturally do. If you don't put money in an index universal life policy, you're going to have a brokerage account. The market goes up, you're going to want to sell in your brokerage account. That's going to trigger taxes. The market goes down and people panic. Well, you're going to either lock in a loss or you still might have a gain that you're locking in because the market's gone up for several years in a row. You're going to pay taxes. When you pay taxes, it reduces the amount of principal in your account. You can no longer earn money on the taxes that you've paid, right? So, but when you have a floor of 0% like you do in the index universal life, you will be less tempted to sell. In fact, you don't have to sell because you know it's going to be zero for the year. And then when the product starts again after the calendar year's over, you're long from that low point. So it is really great. Now, again, I want you to think, what would your portfolio look like without any negative years? Now, historically, when we compare the index universal life product to a brokerage account product or the S&P 500 on its own versus an S&P 500 with a floor and a cap, depending upon where the cap is, even at 13%, the insurance product beats the standalone brokerage account over time, right? And this is significant, right? It's also significant because If you wanted to reduce the risk in your brokerage account, you are going to sell out your equity position and buy bonds, and bonds underperform stocks. So for you to de-risk your portfolio, you're going to be buying lower performing assets, and you're going to be getting less returns and still not have that protection of zero. But in fact, in the insurance product, you can be 100% invested in equities. And because you have that floor, your volatility is reduced. So to reduce the volatility in your brokerage account, you're buying underperforming assets and you're not getting that protection. In the insurance product, you're invested in a product with protection that lowers the volatility from the get-go, from the beginning, from the inception. Protection reduces the volatility, not the underperforming asset. This is key. The insurance product also has a death benefit. Now, it's very important to realize that when you structure an index universal life policy with Triathlon Partners, we buy the least amount of death benefit for the amount of premium you want to invest. And why? Because we want to take advantage of the great investment options and the tax status of which your money grows. That's very important. We want to buy the least amount of insurance, so the cost of insurance every year is minimal. Right? On top of that, we are aware that the best insurance to buy for the death benefit is not this product. It is term insurance. And I've gone into that before in different videos. So from that standpoint, it's a benefit, but it's an ancillary benefit. And that's why I'm listing it as number 3. Most people would think life insurance, I'm listing it as number 1. I am not, because that is not the purpose of this policy. This policy is for growth that's tax-free and tax-deferred, right? And in fact, the question is, now that I have all this money and wealth accumulated in my index universal life policy, how do I access it? Well, if you withdraw the money straight up, the profits would be subject to income taxes. But that's not how we do it. We structure the policy so that when you want access to your wealth and you want to create a tax-exempt cash flow that's like a pension, we borrow the money, because taxes could be 20, 25% on capital gains, right? When it's income, it could be 30, 35% on income. When we borrow it, the cost depends upon the carrier, fluctuates between 0 and 3% a year. The cost to borrow the money is significantly less than the cost of paying taxes. So when you have an alternative of a brokerage account or a 401k, you will be paying capital gains, or if it's a retirement account, income tax on 100% of what you withdraw, right? That's why this is a better product. You're able to keep more money in your pocket, and it's tax exempt. You don't pay taxes on it. There's no W-2, right? So I know there was a lot that I threw at you in this video. Sum it up. Why is the Index Universal Life Policy the best investment to achieve your long-term financial goals? Number 1, its tax status of tax-deferred gains and tax-exempt withdrawals. Number 2, it's an unlimited Roth IRA. Number 3, the annual investment strategy or structure has a floor of 0%. No negative years will increase the value of your portfolio over time. Number 4, it reduces the risk of your investment with protection, not by buying underperforming assets. All right. Well, please, if you have any questions, check out our website, www.triathlonpartners.com. Make an appointment for a free consultation on how to structure a life insurance strategy, how to structure your retirement that will be robust, And thanks very much for tuning into this episode on Triathlon Partners TV. This is Ira Koyner, the original IRA, wishing you a blessed day. Thanks.